Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. Happy Monday. I hope that everybody had a phenomenal weekend. We have an absolutely loaded economic calendar headed into this week, kind of the week that everybody has been waiting for, and we are getting closer and closer to finding the answer to the question of, will the market rally into the end of the year? Are we going to see that Santa rally? And to talk about what we're looking forward to headed into this week as far as trading the markets is concerned, we've got a loaded panel with us this morning, starting with Coach Dipka. Good morning, Coach.
Morning, guys. Excited to be here. We got a loaded week, but we got to treat it just like another day. Let's get after it.
All right, Noah, Diamond Trades.
What's going on, guys? Very excited for this action-packed week. Let's get it started off the right way.
Absolutely. Money Mander.
Crazy week ahead. Happy Monday. We got a great Fed forecast for you today to get you guys ready for the data coming out this week, and go ahead and kill it like usual.
Ramsey Rippers.
Good morning, guys. We got the Kane Christmas tree, trademarked, patented, whatever you want to call it. Good weekend. Solid sleep. Maybe not enough. We were up all night crunching charts as usual. Bags under the eyes again, but we're ready to go. Let's do it.
All right, and this morning we actually have two special guests with us. First, we'll introduce Stratton Oak. Good morning, Stratton. Welcome to the show.
Hey, good morning, guys. Thanks for having me. Really appreciate you having me on. Like you guys said, action-packed week, so I think FOMC is going to give us a lot of direction. So excited to get into it.
Absolutely. And last but absolutely not least, Dorth Trader. Good morning, Dorth.
Good morning, guys. How's it going? Super action-packed week, like you said. CPI, FOMC. Really prepared to just take advantage of the opportunity this week. I'm looking forward to it.
Absolutely. So they mentioned it, CPI, FOMC. To talk more about that, we're going to head over to our macro experts, Noah and Money Mander. What do we got on the economic calendar and Fed forecast headed into this week?
Absolutely. So this week is going to be action-packed, as the guys mentioned. We can pull up the economic calendar, and Tuesday is going to be really, I think, the highlight with CPI, core CPI, and then obviously Wednesday, right after that CPI number, we had the Fed interest rate decision and the Powell press conference at 2:30. So we're expecting a lot of volatility, particularly on those 2 days. Outside of that, we have retail sales on Thursday and then flash PMI on Friday, two pretty low impact numbers. So a lot of the volatility is going to be centered around that Tuesday and Wednesday timeframe. Just going back briefly to last week when we had PPI come out on Friday, we had PPI, year over year come in pretty much in line with expectations, 7.4 versus 7.3 expected. Month over month came in at 0.3, which is, again, in line with expectations. So what we've been seeing in PPI is this decrease year over year as the comps from last year sort of come up, and we're comparing them against more favorable numbers. So we're seeing that decrease year over year, but we're still seeing this month over month increase in PPI. When we turn to CPI, we're seeing something extremely similar, right? So we had the CPI numbers on Tuesday. The same thing is happening there, where we're getting this year over year decline, right? Since I believe it was 9.06 peak back in June. But the month over month numbers have started to creep up really since August. And so that's exactly what they're expecting. Again, for the CPI print on Tuesday, we've got, I believe the expectation is 7.3 to 7.5% expected, with a 0.3 to 0.5% expected increase in CPI month over month. Core is expected to come in somewhere around 6.1 to 6.2%. And this is also the same day that the FOMC starts their meeting, of which we'll get the results, the interest rate decision, and obviously the press conference on Wednesday. The CPI number is really going to have an impact on the Fed, because it's going to be like, are we really doing our job with inflation? And so it'll be interesting to see how that number plays a role on their decision making and maybe their forward guidance come Wednesday.
Yeah, I think for myself, it's really rather concerning that we've gone this many rate hikes into the year and the month over month numbers are still upticking, because we've covered this a few times now. Your year over year is going to continue to decrease, especially in the next year, because inflation started to uptick at the end of last year. So we're comparing it to higher numbers, but the month over month is really what you want to start seeing come down to show that legitimate inflation is down from peak, right? The year over year numbers are just comparing from where we were, this same month last year. That's less relevant to me than the month over month. So I guess we'll really see, right? I think this is going to be a really important print. I went ahead and did the numbers for you so you didn't have to. Intraday returns on SPX have actually been rather muted on CPI releases. So really what you get are these big gap up or gap downs really in the futures trading session, right as the numbers come out. But your intraday returns here, so the releases we've had that come out hotter than consensus have averaged a minus 1.2% intraday move, right, from the open to the close. Coming in at consensus is a plus 1.4% move, and then lighter than consensus is a plus 1.6%. So we've had 3 outliers so far this year that had only a greater than 2% intraday move, whereas the majority of these are really kind of muted returns. And so here's what I've been looking at, Ryan. If you could pull up this VIX chart for us. We covered this last week. As your VIX gets into demand here under 20 so far this year, we've seen slingshots out of this hole really. And it looks like that's what we're getting again, right? We're up about 6% going into the open today on the VIX, and it's up 27% in the last 6 sessions since we covered this and put this chart in front of your guys' eyes when we got under 20 there. The thing that this does, though, is with the VIX where it's currently at, right? This price is in a plus or minus 1.52% intraday move, plus or minus in the S&P 500. And as I just covered, right, we've only had 4 of the 11 prints cover that really, right? We've had 4 of the 11 have greater than a 1.5% intraday move. So to me personally, I think the trade was long and vol out of this hole if you wanted to take VIX calls. But now really where it's at, you're putting yourself in the minority of what's happened so far this year, trying to take any swings into this, right? Just because of where the implied volatility is at. And historically, realized volatility always underperforms that implied volatility, especially going into these binary events. So for me, I'm personally going to be playing futures at the 8:30 release, maybe playing SPX options pre-market because those do trade 23.5. But for me, this is not anywhere where I'm looking to take any swings or place my bets before the release comes out, because even if you're right, you could just be wrong because of that implied volatility factor.
Right. I mean, the last thing I'll say before we pass it back to Alejandro is every time that we get one of these moves, people love to sort of have that hindsight and say, what if I had gotten in this? What if I had gotten in that? And I think what Matt is saying is that these may not be the conditions to sort of chase that move, right? If we're going to get a huge reaction to CPI, if we're going to get a huge reaction to the FOMC release, you're going to be able to trade it, right? You're going to have an opportunity to make your money, to participate in the move. Don't necessarily do something stupid and go ahead and chase or gamble before the release. In our opinion, it's just not really the best way to go about it. But that'll do it for us here on Fed Forecast, and we'll pass it back to Alejandro.
Thank you, boys. Exciting week to come. Let's go over to Ramsey now for Bet the Bell. Ramsey, what do you got for us?
All right, guys, what's going on? We got a massive Bet the Bell segment today. Obviously, we have our 2 guests on the show. So how it goes, I'm going to ask our panel of guests a variety of questions, market related today. They're going to give me their answers. We're gonna see what the guys think. So first and foremost, as you all know, the green or red question. Indices are opening up about 0.25%, 1/3% up. So let's start it off. Green or red today? Noah, talk to me.
I'm going to go with green. I do think that we're going to have like a pretty muted day, just ahead of the releases, just ahead of CPI, ahead of FOMC. I'm not really expecting much volatility, but I will say green today.
Stratton.
I'm going green today as well. I think we're going to have an inside day today. I'm expecting some chop going into CPI, but I think we hold the green that we have in pre-market now.
Beautiful. And Alejandro.
I'm going to go green. I don't know if you guys remember, may have already forgot about the little sell-off that took place in the last 15 minutes of Friday's session. I think it looked trappy. Noah mentioned it going into this week. I think that Monday, Tuesday are going to be pretty muted. We'll likely trade flat. And I think that Friday's sell may have caught some people trying to short the hole coming into Monday. So I'm going green.
I like it. Right now, if the market opens right now, we're opening up right in the middle of that little sell-off over the last 25, 30 minutes. So this leads me into my next question. As you guys know, CPI this week, that's truly going to – CPI and FOMC going to tell the tale. We got our estimate in at 7.3%. What I want to know, you guys thinking over or under? Dipka, what do we got?
Yeah, so maybe a little bit of wishful thinking here. There's just too many levels, gaps to fill to the downside here. I'm going to go with the over, kind of a significant drop. Previous came in at 7.7, which was a pretty significant drop from like in the 8s the month before that. So I'm going to go with the over here. Just, maybe a little biased. That gap fill to 381 is too juicy. That 365 core, too juicy. I'll talk about that with my top watch as well. So I'll dive more into it.
Gotcha. Money Mander.
I'm going to say we come in right at consensus. I don't really think we beat or miss this number by a lot. But in my personal opinion, I think the core CPI number is going to be the important one. And then that month-over-month comp like we've been talking about. I'd say in either direction, though, maybe we come in like 0.1% off in either direction and get a pretty muted reaction, though.
Pretty muted reaction. You don't think market's heading to zero?
No, I think all eyes are on Powell
Wow.
on Wednesday. CPI, I mean, it is what it is. It's going to come in pretty much right where analysts are at.
But after
Powell, Bear, this is your Super Bowl, dude.
Wednesday is going to be the Super Bowl.
Okay, so you're betting on the Powell.
We got a great segment prep for Wednesday morning. But tomorrow, in terms of CPI, I don't think it gives any drastic move, really.
Gotcha. Wow. Darth, let's go to you.
I got the same Wednesday sentiment as Mander, but we did see consumer food components jump by 3.7% in November, which was the fastest increase since May of 2020. I do think that's going to have an impact on CPI, so I'm taking the over here.
Interesting. I like to hear it. Stratton, finish us off.
Yeah, I'm going to follow Dipka's lead here. I'm going with the over. I think it's we've got a lot of gaps to fill on the downside. But to be honest, I think my eyes are going to be on Wednesday when Powell starts talking. I think that's going to give us the ultimate direction coming out of this week. He's either going to send us to the ditches or he's going to send us, flying upwards. So that's what my eyes are going to be on.
All right. Everyone seems to be somewhat on the same page. This is going to lead us into our last question. I'm really excited to talk about this last question. Ryan, before you pull up the tweet, I'll give a little intro. So I'm excited to talk about this next question because an extremely exciting investment opportunity crossed my desk today. A multinational, incredible, cutting-edge crypto tech firm out of the West Coast awaiting imminent patent approval on a life-changing generational service with a former 10 billion net worth CEO. Ryan, pull up the tweet. SBF says he hopes to start a new business to make enough money to pay back the victims of the FTX collapse. Guys, I know where I'm pulling out my money and putting it in. What I want to know is, are you guys with me? What are we thinking? Are we bullish or bearish on SBF's new cutting-edge West Coast tech former $10 billion, yada, yada, yada? You know the deal. Diamond, you're laughing. What are we thinking?
I just can't believe that this guy could lose that amount of money and still be in a position to even say something like that, to be like, let me try again. Let me give it another shot on goal. I wouldn't touch this company with a 10-foot pole.
All right, Stratton. I see your profile picture. I don't know if that is a little reminiscent of the little pitch I just gave. Talk to me.
Yeah, no, I kind of agree with Diamond here. You know, who's going to give this guy another dollar? But I did talk to some of my contacts out in Hollywood, and I think that was the premise of this new Netflix show that they want to do with him is, you know, he has to try and raise this capital, and they're going to try and make a show off of this. So for me, I'm out on this one.
It's actually, what a circus. Just a clown show. Look at this guy at the bottom of the screen. Hondo.
Dude, this guy's a piece of shit. I mean, like, I'm with Noah. First off, to have the stones to, like, the whole FTX thing, we're still very much in the midst of the entire FTX thing. For him to have the stones to come out and say, all right, I'm trying again, and he's already asking people for money, fuck this guy. Get him out of here.
Get him
out of here.
Vader. Or Darth, my bad.
Yeah, I think it's a bit tough to run a fund in jail, so I wouldn't be throwing my money with him. I think that's where he should be trying to run it from anyway. So I can't give him any of my money, that's for sure.
Dude, the guy needs canteen money. Where's he gonna get his M&Ms or whatever the hell they eat in there? Dipka.
Listen, the guy's got Buffalo Soldier stones. I'm with him. Listen, he may have struck out once, but he won't. You know, what did I say on Bet the Bell the other week? Dipka lost yesterday, won't lose again. I'm feeling this. This guy's got that same energy, so I'm down. I'm in.
Thought about it. I'm in. Mander.
I'm with Dipka, so I'm actually coming off a cold from last week, and I have a massive trash bag just full of used tissues that I'm willing to donate. He can value it at whatever he's at, and I will give him every penny. But that's about all I'd put in this is used tissues and other shit that I have laying around in my trash can.
Guys, I'm completely joking. Guy's a scum rat. Not putting any money into it. Just wanted to sound a little bit like Jordan Belfort, Wolf of Wall Street. I don't know if anyone got the reference, but that's going to do it for Bet the Bell today. Hondo, take it back over.
All right. Dipka. We're going to head over to Coach now for Dipka certified levels of the day.
Love it, love it. Let's pull up the timer, guys. We'll get my chart going. Half you guys probably sitting in your bed right now watching this on your phone. That's okay. You didn't get your charts done. I got you covered. I only got 3 levels for you today. A lot of the guys talked about CPI tomorrow, expecting sort of an inside day with chop. That's okay because these levels have been respected despite the chop. So we're going to take a look first at that really pivot level, that big pivot level at 395.25. We've played it in the Discord a couple times. This is really just, I'll play this long or short. Watch for those break hook and goes. If you missed that, just check out my Twitter videos last week. I put out some free EDU on Twitter about those. 392.50 is going to be our real core support. I mean, you see it on this 15-minute chart. Just look back to last week a couple times, held 3-4 times intraday, came back and tested pre-market this morning, bounces there this morning at pre-market. And then overhead, we really got that 397.14. Okay, you see we had a double top, looks like last Thursday. Friday, we had a false breakout, and then we sold off back down to lows at this same high at 397.14. So, yeah, I mean, I'm really loving these levels for today. 392.50 support, 395.25 is going to be our pivot. Play it either way. 397.14 will be our high. To be honest with you, I'm really not expecting. I'm also with the panel and Stratton about that inside day today. So I'm not really expecting this range to break, but I will say you could see some risk off into CPI, which we have seen particularly in the last 2 hours of the trading session before CPI. So I think the morning we definitely don't break this range. But you could see this 392.50 spill, and if we do, it could accelerate into the close. So I will be on watch for that today for sure. But as always, not a second over, done in 60 seconds, got all 3 levels, and we're ready to go now. We'll pass it back to Alejandro.
All right, guys. So as you know, at least once a week, we like to highlight one of our Kane Capital members who has been doing really, really well. Not just performance-wise, but who has been showing a ton of dedication and fire to learn in the Discord. So this week's member spotlight, this Monday's member spotlight is going to be Banta. Run it. to you. I'll let Dipka take it away here.
Yeah, so I'd like to call this guy the all-seeing eye. Anytime I'm in a play and it's a winner, this guy's taking it for another 100%. He's in the SPXs. I mean, just incredible what he's doing. He changed his name to the Future Sniper. He's been posting these charts in the chats. I just love what I'm seeing from him. He works really hard, and I'm glad to see all the hard work paying off for him. So great job, Banta. Hats off to you.
All right, guys. Now, to close up the episode, we're going to go through today's top watches. So easily the most important segment from today. We're going to go around and ask the head traders what is it they're taking a look at headed into today. And as you guys already know, and as you guys already see, we do have two special guests with us. They're going to be sharing some ideas. So to kick off today's top watches, we are going to go over to Darth Trader, who's got some charts for us.
Yeah, so I just got a basic SPY chart right here. I've been talking about this 390 trigger to the downside for a while. Really watching that as a line in the sand from a macro sentiment standpoint. I think we get below 390 and we potentially see some accelerated selling into that liquidity gap at 380. But just like Dipka said earlier, that 395 level is kind of acting as the mean to the standard deviation of this 390 to 400 range. Anything in there for me this week is a bit risk off headed into Powell. I do think Powell is going to be the trigger to a bit more volatile move. We are probably going to see a pretty nasty gap up or gap down on CPI, which will invalidate any of these technical levels. But for me personally, 390, 400 psych levels above it and below are going to be the trigger to making those bigger range expansion moves to 410 overhead or 380 below on SPY. QQQ here, pretty simple. We have this 285.64 level that's been respected for the past couple weeks now. Since November 18th, it was acting as resistance, turned support, turned resistance again. That 278.78 level up to 285 is just going to be our chop zone. Nice little range to play the edges there. We've been taking puts at the highs, calls at the lows. Until we see a break of that range, similar to SPY, see some range expansion to the upside or downside, I will be risk off until then. And Apple, my favorite chart in the market right now. We've seen these consecutive lower highs for quite a while now, and the biggest thing I wanted to highlight on Apple here is that really odd that being the leader of the market, we didn't see an extended rally to the upside on Apple like we had with SPY. A lot of the things that led this previous rally were financials. Apple kind of working on a double bottom here at this 140 psych level. I think if it starts to leak below 140, that is going to be the trigger to open up some more downside for SPY and QQQ to get into those liquidity gaps. So alert set for me on 140 on Apple, and then that trend line test overhead is what I am watching to kind of lead the market sentiment moving forward.
All right. Thank you, man. Beautiful stuff there. Let's go over to Stratton now.
Thanks, guys. So this is a CAT, C-A-T, Caterpillar. This is a name that I like. I texted the guys on Saturday about this because I really like this setup. This is the weekly chart on CAT. So we've had some massive moves up on CAT, and last week we actually played a lot of volatility on CAT based on volume. You guys know how I like to trade volume and news. We had some really nice trades last week on CAT, and so I pulled back looking at the daily, now looking at the weekly. You can see how overextended this name is, and really under this 227.50, 225 area, we have a lot of room down. So if the market does pull, I think CAT is going to be one of the easiest names to swing downside. Potentially taking some January puts on CAT. This could be a potential swing play like Tilray was for us, where we took it, 500% in 4 days. Next one that I like is Netflix. Again, this is a weekly chart on Netflix, so you can see how beaten down this Netflix chart is, specifically back in April, right, when we had that earnings miss. And we gapped all the way down. We touched lows, 52-week lows of 162.71. I've been telling a lot of people to keep an eye on Netflix because those dip buyers at that 162.71 level are now up, basically 100% at that 322 spot. So obviously, I think we're going to have some consolidation here before we actually break out of that upside level. 330, I think it's 335 on my chart to the upside there. But that's going to be the level I'm watching upside. I want to see us break that and then push up higher. I think there's been multiple price target upgrades on Netflix. Last week, we saw a push up. Everyone's got basically 400 as the price target upgrade. So I think if the market does push, Netflix is probably going to be one of the easier names to long January calls potentially on Netflix.
All right, Stratton, thank you. Coach Dipka, what are you looking at?
Yeah, guys, I got sort of a hypothetical here of my top watch. This is really what I was talking about when I got asked the CPI question. But, I'm looking at an over 7.3% print. And, we have an immediate gap that needs to be filled to 381. I think that'll be a pretty easy $10 plus move, which would result in a $100 move on the futures. I'll be trading the futures personally at 830. I mean, not right at 8:30, but, after I see the report, try to, scalp this to downside, match it up with, this 381 level on SPY. But I think this gap should be filled as long as we come in hot. Now, I don't love to play hypotheticals, right? So obviously I will just adjust based on what comes in. I just think this is the most likely scenario. I didn't want to give you 10 different hypotheticals today. Obviously, a lot can happen this week. This is just what I foresee as being the most likely. CPI comes in hot. We fill the gap to 380. Then we kind of got to decide after Powell, how hot was the CPI? What's the Fed rate decision? And, from there, we will either break that 380, which is another really key daily support. And if that cracks, we're right back down to the forsaken 363 to 370 range. You guys probably forgot about this range. But, remember in early October and late September, we were just trading this for a while. So it seems like a magnet down there to 365-ish if Powell wants to put the hammer down. I think that's, again, the most likely scenario. But, again, we will see based on the data and based on his decision.
All right, Mander.
All right. Well, Stratton, I really like that upside Netflix chart, but I'm with my man Darth here with Apple. I'm just going to keep updating this once a week until we see this move fully play out. So, listen, they said we were crazy shorting it at 150. We took Apple for 8 bags last week to the downside. I'm still watching downside because 140 clipped to the penny, saw some buyers. But if we get any type of move here with Jerome on Wednesday that sees downside, Apple is going to be my 100% top watch for this gap fill down to 135 and really the blowout under that as we lose that year-to-date support. So this is going to stay my top watch once a week for a while here as we watch the king of the hill fall off.
There he is. There's the perma-mander that I know.
We were waiting for it all episode.
Here he is.
All right, let's wrap things up here with Ramsey.
All right, guys. So I've been talking about this weekly chart on Amazon. Got to bring it to Beat the Bell now. So we got the weekly here. We can see a rounding top formation. The two main levels of the rounding top, the peak and the neckline. You can see 188 peak, 144 neckline. We did the measured move count back in April and May. A break of that 144 neckline, measured move count, 44 difference between the peak and the neckline. On the break, 144 minus that difference, 100. That's our measured move count. We bounced at 101. Look at where we peaked now. Peak of this little range move back at 144. Now we're forming a head and shoulders. 144 peak, 101 neckline of that head and shoulders. We broke, we hooked, and now we're starting to go. Measured move count goes really all the way down to 55. I'm looking, and Money Matter said the exact same thing. I'm looking for December lows, 2018 December lows, 65 as a magnet. And I mean, it's really playing out right now. It's a kind of gnarly chart on the weekly. We got that rounding top break, forming a head and shoulders now and respecting those previous necklines. This one's got some room to the downside, in my opinion.
All right.
COVID low on that one at 81 too. So if that cracks, you're going to see so many stop losses trigger. Everyone who's been long since that bottom's getting out.
Yeah, and I mean, it's not, you don't be too bearish. Like I said, from 188 to what's the low here? 188 to low year 85. I mean, it's absolutely just destroyed. It still does have room. If this formation plays out, I will be willing to play it and maybe buy some at the lows. If not, play it as we see it.
All right, guys. Thank you. Want to thank our guests, Star Trader and Stratton, for joining us on the show this morning. Phenomenal having you guys on. Tons of value that you provided to our viewers this morning. We hope that you guys enjoyed the show. Things will likely look a little bit different for Wednesday morning show. So good luck trading today and good luck trading tomorrow for CPI, everybody. Let's crush it this week. Tons of opportunity to come. Be ready, be smart, manage your risk. And we'll see you guys, as I mentioned, back here on Wednesday morning at 8:30 a.m. Eastern time. Have a great day, everybody.